chance on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, man, first things first, pal. I love you. There's no disrespect. I just knew they were going to click it. But we had a very big thing in bond markets today, and I got something big for you. Literally, Powell might chicken out. Yes, no lie, no exaggeration. How the bonds moved today, it brought up two things. So we had a little bit of capitulation, the whole Snapchat social media fiasco. It was not looking good. But now, based on what the bonds are saying, let's go, baby. It's looking a little bullish, kind of. Don't get too excited. Benny, where you at, bro? Okay, that's why I'm wearing this. I know you're going to have to watch this uncomfortable chess video the whole way through, but we had a lot of big updates. So, ladies and gentlemen, we got the minutes tomorrow. That's going to be a big deal. China right now in the futures, they are already tripping out. But like I said, the two things in the bond market today, we might start to see a narrative shift. So, we got a lot to talk about. I'm going to go over all of that and what happened today, what the bonds are saying, and what this means here in the short term, and then we are going to go over the plays. I made 3 different plays. I shorted 3 different stocks. We got insurance, and we hedged them in a way to even give us a little bit of upside. So, ladies and gentlemen, drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, youtube.com/the stock market. We're live every day. It's free 99. You'll meet your soulmate. You're going to have fun. None of this is a recommendation. I'll just hopefully I see you there. But before I get into what happened today, I want you to understand this and understand this quickly. Right now, we are watching the bonds catch a bid today, and this is what people are bringing up. They are saying ever since the 10-year has hit 3%, we have stopped watching any sort of pattern between bonds and equities, and they are saying this is because now the bonds are finally acting as a safe haven. And over the last couple of days, we've watched the bonds get a bid. But what's the best way to put this? You are going to start hearing this very, very soon. They are saying that growth is replacing inflation fears. That is what the bond market is saying. If people start bidding it up right now, that means people are selling off growth stocks and buying bonds. And it's not because they're afraid of inflation. It's because they're afraid of Snapchat and any of these earnings coming down. That is actually now going to be the good thing, but it's pretty much mission accomplished. Jerome Powell is scared enough people. Things are kind of setting back, and now this is the big problem. But like it says here, the silver lining in all of this, treasuries act like a cushion when equities start dropping. So why is this kind of good? Because now we might be able to use TLT as kind of a defensive play, and then this means that, hey, people aren't worried about unlimited inflation. They are more worried about growth, but the market has seen that before and is able to manage it. So that's the first thing. And now the second thing, this is why Powell's I love you, pal. But now rate hike odds are already dropping. It doesn't matter what Bostic says, what Bullard says, what Powell says. Again, the minutes tomorrow can move things, but people are already starting to point out the market is pulling back. Literally, with things getting so bad and now growth concerns starting to outweigh inflation, or if they do over the next couple of days here, people are starting to say, well, yeah, chances are Powell might pull back. And last time this happened, it was around 2018. When you saw the expectations pull back, it actually did indeed lead to Powell pivoting. So we'll see what happens. Again, that's the bullish part about all of this, is that literally if Powell pulls back, and then if people now start worrying about the actual economic environment versus just inflation and the boogeyman, we may get a little bit of balance and some good things happening. So I want to make sure you know that. I'm pretty sure you're going to start hearing that over the next few weeks. So keep that in mind. But now what happened today? It was 75% Snapchat and it was 25% economic data. Literally, even though we had that bounce at close, and it was a very big bounce, don't get it twisted, nothing happened. We were still down 2%. The staples and defensive names, they actually caught a bid today, and that was very, very good. But we were talking about this all day today. The weird thing in all of this is that literally Snapchat's guidance had the ability to bring down Google 7%, Facebook even 10% at one point. That was the bad part and what people were freaking out about. But now back to the bonds and what they're pointing at. The economic data was awful today. You had the Richmond Fed come in at -9 and it was expected to be +10. Literally, this is the chart. It brings us back down to some very low levels. People are saying this is an economic surprise. And then on top of that, I love real estate, but new home sales got clapped. Literally, they were expecting a drop of 2% and it came in -16.6. So why is this bad? Because, well, everyone's worried about real estate. It's the only one that hasn't been touched. And this is a big number. Literally, it's worse than even 2020 on a month-over-month decline. The only time we saw this was around like 2013. That was like the Euro crisis. Real estate was still a little shaky coming off of 09 and 010, but it obviously didn't collapse the rental market. And this is just new home sales. So we're going to be getting more data. Again, I think Thursday we will be getting pending home sales. So we'll see. But this all goes back to the consumer and people being worried about that. So we're going to see how it plays out. But it's all following with the narrative that these rate hikes, demand destruction, we are actually starting to see it. Now, here's the tricky part. We got the Toll Brother earnings after hours, and they actually beat. They beat on EPS, they beat on margin, and they did good, but they did guide lower for the full year, and they lowered their margin expectations. So we're going to watch a balancing act tomorrow, but that data came in. It was not good. Then add that to what we saw yesterday and the fact we couldn't even get past 4,000 on the SPY yesterday, even after that bullishness. This put people in a mood, and well, really, we're going to see what happens after the minutes tomorrow. So now, as far as the minutes, it's nothing new. And like we brought up earlier, 2 of the last 4 minutes this year, they have actually moved the market. So that's the good news. Bad news, it could totally be a non-event. And even good news is that there's no new information usually. It's not going to be anything actionable, but they might include something that may be new. So we're going to see how that plays out. But tomorrow could definitely be a catalyst. And after that, it's going to be all about the PCE and other economic data to see if these trends continue. And now, after Snapchat and this growth debacle, people are going to start being paranoid about that, especially if you see the bonds get a bid. So don't forget that. But besides that, everything else is going to be straightforward. I think the minutes will be a big driver. And then today, kind of near after hours, there was an announcement that the whole auditing of China companies and that China stock ban, it is not looking good. They got clobbered here in the US, but like I said at the beginning of the video, already Asian futures are starting to drop. So we'll see how that factors into the situation. Other than that, wait for the minutes. Let's see the economic data and let's see if the bonds and people now changing the narrative. Is this enough to give us a little rally, or are we about to go 8 weeks in a row of declines? Come on, Powell. New Powell workout plan. But as far as the play nows, I made a bunch of them, and this is what I want to go over. We started it off. I closed out the Ralph Lauren, and this is what we were talking about. Again, you've been watching me do the short position plays instead of grabbing puts. Why? Because the implied volatility and the premiums, they are not favorable at all right now. So I closed this trade at $87. I made about like $6.98, and remember, we paid $150 for the insurance. This was that insurance play that we bought, so I'm still holding it. Who knows if things go up, but I'm not expecting much out of it. But now, this is what I want you to see. This is the reason why I'm going with the short plays. Look at the June $90 puts. This one would have been in the money this morning. Again, I closed out around like what, $80 or $70? $87 there. So this one should have been $3 in the money at one point or when I closed out. But yesterday, this option was going for about $600, and then this morning, it actually opened up lower, and then even at the top, it went up to 650, aka it was practically break even, then it dropped, and you see here today, it finished around like $4. Pretty much, even if you got the play right, even at the bottom when I closed out the play, you would have still not made a profit. By using the shares, I was able to walk away with $700. So this is what we're talking about. And now, as I get into the other plays, you'll see what we did. So the first one I made today, I went with Best Buy. Their earnings wasn't too great. Again, there was already a lot of negative expectations. It's kind of weird how they interpreted it, but it was a really good stock this morning. It was holding up, but I said, hey, I don't think it's going to hold. So I I shorted 100 shares, 72.70. I could have got a better price there, but then I grabbed two of the weekly $80 calls at 59 cents. So I spent about $118 for insurance. So I got to factor that in again, just like the Ralph Lauren when it comes down to taking the profits. But this time I bought two of them. So what does this mean? I have a little bit more insurance, aka if BlackBerry or if Best Buy ended up ripping up there, yes, it would have capped my short gain, but by having another contract, I still could have left me a little bit of avenue to profit off of it. Now, what's the reasoning with this play? Why did I do it? One, I thought they would fade the earnings, but now it allows me to get dollar for dollar. And even though it's a short position and you could lose unlimited, by buying these calls, I'm using the options as designed and I'm able to limit the damage. So I shorted it at 72.70 and my strike price is at $80. $80. So that is about $7.30 away, 100 shares. That means my max loss is $730. Add that $100 I spent for the option. If this play goes absolutely wrong, pretty much by Friday, if it ends up at $80 even, and those contracts lose any of those value, I would lose about $790 or $800 there because of the options that we bought. So I'm thinking, okay, I could play it if it sells off. I can make a couple hundred. All I have to do is make $100 to get back my insurance play. Everything is profit, but worst case scenario, I could lose 800. So definitely I could lose more than just buying a $50 put, a $100 put, but the idea is it gives me a better opportunity to profit, and that's really what I'm going for. So that was the first play, and then I did it again later here with DHI, and I bought this because of Toll Brothers earnings, and pretty much I was thinking, all right, Toll Brothers reports after hours, we could play DHI as a sympathy, and there was all of that bad real estate data this morning, so I said, all right, maybe we could work something out, and best of all, they're a slow mover, so I liked it, and I decided to short 100 shares at $65.64, and then I bought 3 calls at $69, again, by buying more than one option. Remember, one option represents 100 shares. By buying more than one, if it ended up hitting my top limit on the short, if I got more than one, I could end up actually making money. So I spent about $120 for the 69 calls, got 3 of them. I'm short at 65, and the difference between the two is about $3.50. Add the $120 that we spent, my max risk is about $470. Again, by the end of this week here, if it does end up going past 69 or stays right at 69 without going over. So kind of like an option, somebody brought this up, it's literally the reverse of a covered call, and again, this is why they made options, baby. So I like that one, went with that, and then I did another one, ALGM. This is a chip maker. NVIDIA has earnings later this week. They are also an IPO, and IPOs, I mean, they're just really, really weak right now. So I liked it, and it showed up on the scanner. Go look at the option chain. Literally nobody was trading it. This fat order came in. I said, all right, I kind of like it here. It could be interesting, but instead of going for the options, I decided to do this strategy again. I shorted 100 shares at $23.58, and then I only bought one, so I insured it straight up. I didn't go over, but I had to spend $85, but my insurance is at $25. I'm short at $23.50. It's pretty much a $1.50 difference, meaning I could lose max 150, add the $80. We're like, what, 220, 230 max loss if it stays at 25, but then I have till June on this one, so if it goes any lower, we can make our money there, but otherwise, the max I'm going to even lose playing this will be 120. I like it. I thought it's pretty decent, so pretty good. And then finally, this one's a little bigger, this one's riskier, and the numbers just, again, it's a lot larger, but I decided to go with Costco. And why? Because it has earnings coming up, so I figured if I over leverage with the insurance, pretty much buy more than the shares that I'm shorting, I might have a pre-earnings opportunity, even if I can make money on the short. Pretty much we've seen it happen. Stock could go down, calls still stay up, so we'll see. And again, Costco's gotten absolutely clapped. Big consumer name. They're going to have a lot of implications for the market, so I said, all right, let's run it. Let's make a good one here. But I decided to short 100 shares of Costco at 43 or 433.46, and then I bought 2 calls at 465. Again, I went above with 2 calls, but those calls were expensive. I spent almost $2,000, pretty much $1,800 for the calls, and then 433 is where I shorted it at. My calls at 465, so 430 to 465 right there. That's just about 35 bucks, add that 1,800. We're looking at like $4,800 to like $5,200 max risk if this stock ends at 465 by June. And this one, I made sure I got time. It's a bigger play. We don't have to hold the insurance just to May. Again, you could just spread it out. You don't have to go with the weeklies, and that's what we did. We got 2 weeklies, 2 for June. We'll see what happens, but the whole idea, same thing we've been playing. If we get an opportunity to close them out, we'll take them. But in these cases, I've left myself opportunity for upside or even a pre-earnings move. So those were the main plays. As far as everything else, I'd watch the China stocks tomorrow. I think that's going to be fire. Oil kind of all over the place, just keeping that eye on there very, very well. And then bank stocks, keep an eye to see if they're able to come back up. Again, they dropped today after that run up. We want to see if that gets momentum. If it does, even after the minutes, and then if people start pricing in things different with the bonds, we may get an opportunity. And then finally, TLT, everything I'm saying here, if we could confirm it, the narrative switches, or if Powell says he's going to pivot, start hammering the bonds, baby. It's probably going to be good. So we'll see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you ain't the type to quit, baby. You made it this far. Don't let the intimidation take you off a good path, baby. So let's get to it and get ready. And the bonds are signaling. And let's go, Cole. It's game time. Still got a couple months, and I don't know. R.I.P. Snapchat Pony. We love you, baby. And let's go. Let's see what happens. Get ready for the minutes. It's going to be exciting. I love you, and my hands ain't small. Look. That's a big palm and then small fingers. You know what I'm saying? Y'all don't feel me.